Heroes from SD Bullion, the coin series you won't want to miss. Beginning June 2014. The Heroes SD War Collection launches June 6, 2014 with the limited collector's edition D-Day, the longest day. Available in brilliant uncirculated and proof versions, commemorating the 70th anniversary of the Allied Normandy invasion. Each proof will honor one of the 1,557 missing in action Americans who paid the ultimate sacrifice on D-Day. Heroes from SD Bullion, the coin series you won't want to miss. Beginning June 2014.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Joining us today he's been on the show quite a few times. It seems like I say this quite often, but truly is one of our favorite guests on the show. Turd Ferguson. Since the last time he's been on the show, I think his handle's been outed a little bit, and so it's Craig Hemke, but we'll still call you Turd.
Just don't call me late for dinner, Doc.
That's a deal. We won't. So a little bit of a disappointing week in the markets for gold and silver. We had anticipated a follow-through rally early in the week, and we did see that somewhat with both gold and silver. Silver running up just about to 1980, I think, on Wednesday. Gold running up just shy of 1320. And then on Wednesday, we saw what I would call a classic Swiss staircase decline as the cartel relentlessly hammered gold down to from really about 1315 to 1310, down the next stair to 1305, then to 1300, and then dropped it all the way down to 1290, where it has traded really within just about $1 or two for the past 48 plus hours without any movement to the upside or the downside. And silver also hammered down on Wednesday and has found support right at $19 throughout early afternoon here on Friday. I count about 6 or 7 attempts to break 19 to the downside that were met unsuccessfully. Not really a strong reversal off of the 19, but into the close here today. A bit of a reversal, closing just above 1910. So both gold and silver down for the week after we thought we may see a bit more of a follow through to the upside after last week. So what's your thoughts, Turd, here on gold and silver as we get close to Memorial Day and the dog days of summer beginning? Is it going to be a sell in May and go away this year? Or I know Eric and I have been purporting that this is one of the best opportunities in months, if not years, to stack the metal. We do have silver just about at the lowest level since New Year's Eve. So what's your take?
I would agree with you, Doc. Starting with silver, ever since price came down to the near double bottom in December, 19 has been an extraordinarily strong support level. If you pull up a daily chart, you can see 6 or 7 different occasions, sometimes multiple occasions within those periods where price, like you said, would go down to 19 and bounce right back. Really, there are a lot of reports out there, anecdotal reports about cost of production being near here too. Maybe that's what it is. Maybe at that point, there are actually, I guess, commercials coming in and buying paper futures for future delivery. Who knows? But there's unquestionably very strong support at 19. There's no reason to think it's not going to continue to hold here. In gold, that's really the big story for 2014 is this just incessant, non-stop heaviness being placed on the market by the bullion banks. What they're trying to enforce is a negative sentiment, trying to keep people out of the sector, disinterested. Even though gold is up 7 or 8% year to date, one of the top performing asset classes there is, you'd never know it. Everybody still talks about it like it's going to 1,000. And if you go back and connect all of the bounce back highs from the initial beat down last April, then we rallied into early May, and then went down into June, and then rallied into late August to a lower high, and then down into December, and then rallied into February. If you connect all of those bounce back highs, there's a trend line there that is very clear, and it is that trend line that every time we come up and begin to press up against it, the most recent example being Monday and Tuesday of this past week, the cartel monkeys spring into action and slam gold back. They've done this even just in the last month, 2 or 3 times. You can remember, you can go back to April 15th, tax day, was it the instance prior to this one where they did it. It is imperative that they keep that sentiment negative, because if Western investment demand returns, and gosh, a breakout above that trend line and some increasing momentum would certainly do it. The investment demand returns, they're going to have a heck of a time trying to come up with physical gold to supply the market. So they're doing everything they can to keep it down. Silver is being, is trading along in tandem with it and getting pushed back at the same time. But both gold and silver are up against tremendous support, and I'd be very surprised to see them fall much further from here.
On a sentiment perspective, I'd say that they pretty much are achieving their goals currently. We're continuing to see some of the worst sentiment of the entire bull market, and we were just chatting before the show, Turd, that we posted your interview with Finance and Liberty on Silver Doctors this week, and in the comments section, some of the facts you stated regarding physical gold being removed from vaults were ridiculed pretty much relentlessly in the comments section, and we were just discussing that really overall the sentiment remains below zero, below the doldrums.
Absolutely, and that's critical. That's all part of the plan. But yeah, I saw that too. And if you don't, may I take a second and just kind of explain that again? Because if people read those comments or listened to that interview with Elijah, then maybe I can add a little color and detail here.
Sure.
Is that, it's now been almost 2 years since I was first told that gold was rapidly being drained out of London, shipped through Switzerland, where the refineries were working 24/7 to recast the London 400-ounce bars into official Asian kilo bars of 4.9 quality, and then that gold being shipped to China. And in the post that I wrote in June of 2012, it was called Gone for Good. At the time I wrote that, the outcry, Turd's just making stuff up. Geez, he's just doing anything he can. Well, okay, maybe it took, 9 months, 12 months before that just became generally accepted as true, right? I mean, Google gold to China and see how many things you get, how many hits you get now. Okay, so then now that we know that that's been going on, we began to get anecdotal stories in the fourth quarter of last year that the gold was now gone, that the vaults were empty. One of the first things I saw was on Cruz Jansen's site, where he was interviewing a fund manager by the name of Alex Stanchek, and Alex had just been to Switzerland with Jim Rickards in tow.
Right.
And they had met with a couple of refiners there who were, in fact, running 24/7 and couldn't keep up. And the curious thing was they were starting to get really old, beat-up bars dated from the 60s, as if the vaults were being scraped of every last bar out of London. How about that? Then, about a couple of weeks later, on Bloomberg television, no less, was a guy by the name of Ken Hoffman, who is a serious individual who works for Bloomberg Industries and really knows his stuff. And if anybody would have been in the vaults to see that they're empty, it would be a guy like Ken Hoffman. And he shows up on Bloomberg on just a regular segment in the middle of the morning back in December, and just offhandedly is discussing the stuff with the bubblehead anchors that, doesn't mean anything to them. And he says, look, what I think is going to be an interesting story in 2014 is that, as he said, and I'm quoting him as best I can, he said the gold is gone. And he said the number he used was 26 million ounces, 600 some odd metric tons of gold is gone from London, and in his words, the vaults are empty. Again, now anecdotally confirming these other stories that we had been hearing, from Jim Rickards and the like. And he goes on to say that what he thinks was going to be an interesting conundrum in 2014 is what will happen, and this is critical, should Western investment demand return. Because if it does, in his words, the gold isn't there. Okay, now what did I just say earlier about how important and critical it is to control sentiment and keep price in a downturn? Because what do Western investors do? They shun assets and asset classes that are going down, right? No one ever buys the bottom. And so it's critical for the banks who are in this jam with empty vaults, have leased and rehypothecated and all this stuff, all this gold, it's now gone. Those vaults are empty. Again, allegedly, compared on the words of this Ken Hoffman guy and others. That now, if demand returns from where will it come? Of course, tying all this together are the persistently negative gold forward rates. They're now negative for 60% of the time since the 1st of July last year, after only been negative for 7 days for the previous 24 years. And then you got the curious case of the GLD, which we all know was rated for 550 metric tons of gold last year. All of that likely shipped to the east. And now, even though gold is back up, like I said, almost 8% year to date, the GLD inventory is down 2%. So there's no gold to flow back into the GLD either. So these banks are in a serious jam. People, look, do your own homework. You know, if you don't want to believe this story, if you think I'm just, smoking something, fine. But do not be surprised if by later on this year, just like the gold to Switzerland to kilo bar story eventually was accepted as true, this story of empty vaults will be known as true too. And yeah, who knows? Maybe they'll drive the paper price to zero. I have no idea. But if there's no gold left, I think it's a much higher likelihood that prices, the dollar conversion prices, will be higher, not lower. So anyway, thanks for giving me all that rope, Doc. But that's kind of the background of that story.
Yeah, good stuff, and we couldn't agree with you more, Turd.
We should also just toss in the COMEX warehouse story, as far as registered gold. This isn't a conspiracy theory that Turd is speaking about when it comes to the vaults being depleted. We can't say with 100% certainty that, there's no gold, quote-unquote, available, but there's greatly diminished amounts of gold available, and when investment demand steps up to the plate, it will have a big impact. And COMEX warehouse registered gold went from, around, 3,600,000 some odd ounces available in 2009 and dived all the way down to about 400,000 ounces in 2013, and we bounced a little bit back, but that's a gigantic reduction in registered gold availability in COMEX. And then when you add on top of that the GLD depletion, all of these things are publicly disclosed. They're not open for debate, and when you see these numbers, they represent 70+% depletion of gold from the main western parking spots for gold in the COMEX warehouse or in the GLD being the biggest ETF. So to say that this isn't happening is just to put one's head in the sand. And, interpretations of what this means are open for debate. But the fact is that this 70+% reduction in gold mostly went to China. And the numbers are all there. It's documented. It's not some kind of goofy conspiracy theory.
And Eric, I'd say, you look at all these data points. I can talk about this stuff, the Ken Hoffman and the Alex Stanchek stuff, and someone's going to say, that's nothing. Don't even pay attention to that, or we can talk about the GOPO rates, and somebody like Bron Suchecki will say, that's nothing. Don't pay attention to that stuff. We can talk about Germans getting 5 tons of gold from the New York Fed, right. And you get Sister Christian saying, no, that's nothing. Don't worry about that stuff. And you begin, though, if you really do want to step back and look at the whole picture, and I would imagine the vast majority of people, without the benefit of full hindsight months from now, aren't going to be able to connect these dots. But they're all right there, right in front of you, if you choose to understand and pay attention. But so many people would rather instead say, gold's not going anywhere, and whatever, to each his own. But I'm telling you, the signs are all there. You listed another one with the COMEX inventories. Do not be surprised if all of this doesn't play out in the remaining months of 2014, and then all bets are off after that.
All right, we'll get into Jim Rickards in an interview this week with Fox Business that I posted on Silver Doctors here today, Friday, advised that he came out and called for the Fed to begin tapering QE by July and actually increase asset purchases by 2014.
2015.
2015. So as longtime listeners of the show are well aware, this is something Eric's been calling for probably 6 or 8 months. So perhaps we should say hi to Jim if you're tuning in each week.
So I don't think Jim's following my forecasting, but hey,
you never know. We hear quite a wide variety of people. I'm surprised that tune into the show. But regardless, what's your take, Eric, now on your timeline of the Fed and taper? Are you still looking for a pause here throughout the summer and then an increase into 2015?
have to push it up about a month or two. Originally, I've been looking for July as being the period, or late June as being the period when the pause would come into play. And when it comes to the Fed's thinking and their actions, I think we'll probably need another month or two for them to react. But when it comes to what will be the catalyst that pushes them, I don't think that time frame has changed. I believe that this time around, we're going to see the stock market roll over in the summer. We're already beginning to see the momentum segments of the market roll down. Russell 2000 is now in a 10% correction zone, and biotech rolled over. A lot of the momentum player stocks and the NASDAQ and networking and the internet space and whatnot, the Netflix of the world have already rolled over. So I think it's interesting to see that some of the flight capital that comes out and manifests as asset price inflation around the edges of this whole hyper liquidity fiesta we've had since 2009 is beginning to slow down. You see that in the stocks that I just had mentioned. You even see it in the art market, where it's been reported that in a recent, I think it was a Sotheby's auction, didn't find interested buyers for many of the paintings that they were putting up on auction. And it wasn't because the paintings were of low quality. It's just that I think to some extent the rich that have been bailing out of the system, out of the banking system, and into hard assets, with art being one of the go-to places, have already moved their money. And the
0.00001% are hurting now?
Yeah. Well, maybe they've already, feathered their nest to whatever hedge degree they wanted to achieve. I think that there's some of that going on. You could see, anecdotally, I could make the case that high-end properties in the United States, at least, other than, in London when we had that $250 million apartment being sold, I think a week ago or so. But, there's definitely a slowdown with all cash buyers coming to California and scooping up stuff in the Bay Area, with Chinese flight capital as but one example. So it kind of looks like this process of the end game unfolding before us when it comes to how people of means deal with this excessive liquidity generation has run its course to some extent. And so that thesis does not bode well for the stock market, because I think to some extent that's also going to contribute to the lead weight around the ankles of equity investors. Getting back to what your initial question and time frame focused on, I still believe that we're going to see a rough summer in the stock market, and then the Fed is going to respond to that. And the real estate market as well is already getting weak around the edges. I mean, March is supposedly a strong month, and the numbers that came out were not, they just don't speak to a healthy real estate market either. So I think the Fed has been playing this game of trying to increase asset prices for the wealth effect, as the economists over there term it, in terms of spilling over to boost consumer confidence and in turn spending in the economy. And that game is probably going to just fizzle out in the summer, because we're in reality facing a country where 1 in 5 families don't have a paycheck coming in. And when you have 65-70% of the economy based on consumption, you really have to scratch your head and wonder how long all the wheels can stay on this bus, because it's really, really unstable. And the statistics that come out of the Fed, or in the Bureau of Labor statistics and other government bureaucrats that slave away on producing these reports, are by and large bullshit. And the economy is a heck of a lot weaker than what the mainline headline statistics suggest. And then you add on all the geopolitical risks, and I think to some extent too, Rickards is pulling in his forecast sooner for currency reset in terms of the global standard based on the dollar reserve status, because he sees what's going on with China and Russia in response to elevated geopolitical tensions. And I believe it was last week that the World Bank came out and said, guess what, folks, if you look at a purchasing power parity model in terms of what money can actually buy in countries, China's economy actually is bigger than the United States. So, it was only a couple years back that people were saying, oh, China will be biggest economy in 2025, 2030, whatever, and then all of a sudden, these elevated forecasts are coming forward because the world is changing a lot faster than what the sleeping mass of most Americans are able to perceive, and that's going to translate into a lot of turmoil, I think, this summer. And Rickard's forecast and outlook is that sometime in the next couple of years, certainly, but as soon as maybe even tomorrow, he's said at times, if the appropriate black swan were to manifest, that we'd see the whole change in the international reserve status of the dollar and countries being more aggressive than what they've already been so far. And at this point, we have 25% of world trade concluded on a bilateral currency swap basis, most of that being led by China's economic actions in the world. So it's a very different world than what most people in the talking heads land of Bloomberg and CNBC speak about. I mean, 25% of global commerce is now done on bilateral currency swap basis outside of the dollar zone, and that's amazing. Yep. It's only going to speed up.
A big change from recent years. Well, I wanted to give readers, or listeners, I should say, a quick update on the status of the physical market here in the U.S. on the wholesale side. And we're beginning to see the first signs of a retail shortage developing in silver. And then when I say the first signs, what I'm referring to is the 90% silver. In the past shortages of silver, the last big one being about April, May of 2013, after the big takedown, the shortage developed. Really the first product to show signs of a shortage was 90% silver. And we've seen a big move both in premiums on the wholesale side as well as a decrease in availability over the past week. Premiums jumping anywhere from 75 cents to $1 an ounce across the large wholesalers and the authorized purchasers. And I just wanted to share one anecdotal story of our experience with SD Bullion here today, Friday. While many of the wholesalers are completely sold out and promising delivery in 2 to 3 weeks of 90% that they haven't even purchased yet, and they hope to be able to purchase from someone in order to fulfill that trade. We spoke with one of the largest wholesalers here today, and our trader was put on hold for a moment and was informed that they needed to run the quarters through their coin counter to see if they could come up with 500 face for us. So, and our trader stuck his head out and said, I'm pretty sure we have more 90% in our vaults than this, I won't name them, but one of these largest wholesalers. So just one anecdotal story, but really 90% has dried up over the past week, and really what triggered it was that smash last week, Wednesday and Thursday, where silver dipped down under 19, I think somewhere around 1875 or 1880 was the low. And that's where we really started seeing the signs of the 90% drying up. And we haven't seen that pass along to any of the other products yet. Silver maple coins are readily available. Silver eagle coins are readily available. Most of the other generic rounds and bars are readily available. We've been able to offer the lowest prices we've ever sold silver eagles for, and silver maples right now. But again, this is kind of the first initial sign, and whether that initial sign of 90% starting to dry up follows through to a shortage in other products obviously will depend on the markets and whether silver heads back under 19 again. If that happens and silver heads towards 18, I can tell you that the demand is going to pick up substantially, and you will start to see premiums jump in the other products of the rounds, bars, and official coins. But I wanted to move along here, and Turd, I wanted to throw the ball back into your hands here and get your take on last week's report from the CME that they're moving, or they have plans anyways, to move into the Asia market with a physical gold exchange either in Shanghai or Hong Kong. I've long kind of believed that rather than an outright COMEX default, the COMEX would be proven irrelevant and would simply fade into insignificance as the market moved east. Is that what we're seeing here, or what's your take on the CME story?
Well, that's certainly the trend, isn't it, Doc? They are fading into irrelevance. That's for certain. In gold in particular, where the open interest just as recently as a month ago, was at a multi-year low, off 40% at least from where it was a couple of years ago. And there's a lot of things that factor into that. But for me, first and foremost, is just kind of the recognition of people that would be putting money there, that it's crooked, that you really don't have a fair chance, that it is just a casino, and the bullion banks and the CME are the dealers, and they've set up the game so that they're going to win. And so interest is moving away from there. And of course, the other problem, and we kind of touched on earlier, the lack of Western physical, because your exchange has to have some physical connection. You can't just simply, we can't open Doc and Eric's gold exchange and start selling 1,000-ounce gold contracts without having the ability to physically deliver it. I mean, that has to have some tie to reality. And the COMEX has lost that. I think the numbers where we show these delivery numbers where 1 month JP Morgan's proprietary account is taking delivery, and the next month they're delivering right back to Scotia Makata, and then the month after that Scotia Makata is issuing right back to JP. I mean, they're just trying to create this illusion of some kind of physical connection, and I think they've lost it. And obviously the center of the gold trading world in the 21st century is not going to be London, it's not going to be New York, it's going to be, Shanghai, Hong Kong, Singapore, something like that. And this is a recognition by the CME of that eventuality. I mean, at their heart, the CME is just a bunch of greedy bastards that just want to make money, right? That's why they allow HFT, because they get to skim and charge a fee on every single trade that gets done. They want as much volume and trading activity as possible. And if they see that they can make money opening some type of physical exchange or physical contract that's based in Asia, they're going to do it, if anything, because they know that they can make money. That's where the action is. And so this announcement by them that they're going to do that is, again, just a recognition that is going to be the global center of metals trading in the 21st century.
Asia will be the market.
Yeah, absolutely. And again, that all ties in with the currency war stuff and, whatever alliance it's developing or has already developed between China, Russia, extending into Germany, all of that. It's whether that eventually is a new currency backed with gold, like so many of us think, whatever. It's just without question that is going to be the center of the global gold trade in the 21st century, because that's where the gold is at this point. And so the trade will be where the gold is, and that's where the gold is. It's not, it's not in London, it's not in New York anymore.
Right. Well, before we wrap up the show here today, we've been a long-time reader and advocate of your website, TF Metals Report. For listeners who aren't aware, it's been about 6 or 12 months ago, Turd launched Turd's Vault, a subscription service with special podcasts and commentary. And correct me if I'm wrong, Turd, but I believe I saw that you're offering really a free trial of several weeks of complete access. Is that still available for all the listeners?
Yeah, sure. It's something I don't go out and promote a lot, just because I'm a one-man show, and it's not set up to do it automated, so I have got to set up every account and set them up for 2 weeks and all that kind of stuff. But I've set up a special email address. It's TFMRComp, TFMRCOMP @gmail. You can email me, let me know what username you might like, and I'll set you up for a couple of weeks, and you can see if it's worth the value. For 50 cents a day, $10 a month, you get my chart work, for what it's worth. You get podcasts every day that are kind of a summary of everything that's taken place if you haven't been following along all day. And then once a week we have an interactive webinar where the subscribers get to actually ask questions of the guests, of the people that I've gotten to know. And I know, Eric, you and Doc know many of the same folks, but it's a chance. I mean, we get to call these people up and email them all the time, but the regular guy doesn't usually get to do that, so I try to offer that too. It's a great community. I'm really proud of what we've built there, people that are all looking out for each other and, recognizing this eventuality of the end of the Keynesian experiment. And so, I think it's a fun community, it's a vibrant community, and I invite people to stop by, and if you want a 2 week to look behind the curtains of the vault, send me an email to that tfmrcomp at Gmail address, and we'll set you up.
So send Turd an email, and we highly recommend checking out his services over at TF Metals Report. So, Craig, Turd, it's great to have you back. Always a pleasure to have you back in Metals and Markets.
Hey, thanks, Doc. Best to you and yours, and you too, Eric. Have a nice weekend.
Thanks a lot.
All right, so that's a wrap. So thanks for tuning in to the SD Weekly Metals and Markets.
The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.